Well, it's so good to have all of you here today, and I am excited about today's episode because Corey's left me unsupervised. I'm now doing Your Business, Your Wealth by myself, and I've brought in a friend, Van Haas from Accountix, who runs a bookkeeping and accounting company where small business owners have the opportunity to outsource that accounting need. And he's going to talk with us a little bit about the things that can go on in the accounting side of your business that can sink your ship. Van, welcome to Your Business, Your Wealth.
Hey, thanks a lot, Paul.
So I want to start off, maybe just give our audience just a little bit of background on you, your business, and all of that good stuff. And then I cannot wait to jump into some of the things that you sent over ahead of this call.
Sure, you bet. Thanks. Thanks again for having me. And so I started Accountix in 2015. Actually, it was March 2015, so just about 5 years ago. And prior to that, I had a consulting practice where I did a lot of financial management with small businesses. So we looked at cost management, we looked at profitability and how to improve the business. Think of it sort of like an outsourced CFO.
Got it.
And over the years, I was frustrated by the lack of information I could get out of the system. A lot of small businesses just lacked good financials to run their businesses. So if they had bad financials, I had a hard time doing what I wanted to do to help coach them. So in 2014, 2015 is when this idea of Accountix was born, and it was all about, hey, why don't we take, instead of just looking at the financials after they're done, why don't we help actually prepare them? And so that's when we started working with small business owners and small businesses to do all the bookkeeping they need. Mm-hmm. But then it actually goes a little bit higher. So we go from bookkeeping to, maybe what an internal accountant might do, to a controller, to a CFO level. So it's this whole suite of services that I call it an accounting department. It feels very much like an accounting department. So we help small businesses make sure they have good numbers and help them use those numbers.
Now, I've got to say, as you could hear that and hear it like, okay, this is somebody that can do what my internal bookkeeper does. And that would be a yes and. Because in a second here, we're going to look at this document you sent over, and it's amazing to me because I think people don't talk about this. They don't talk about it because it's embarrassing. They don't talk about it because people feel personally violated. But business owners every single day are losing money to these kinds of accounting mistakes and internal fraud that occurs. So if you can just kind of walk through this first one, really jumped out at me, that the actual losses incurred by small business are twice as large as those with over 100 employees. Why is that?
The statistics right below that kind of tell that story, and 42% of the cases in small businesses are caused by lack of internal controls. That's an accounting term, but essentially it means that there are no processes in place, or fewer processes in place to split duties, to have extra reviews on those numbers, to control who and how checks are cut and how vendors are entered into the system or how customers are entered into the accounting system. So controls mean there's layers of protection in place so that there isn't just one person or a very small group of people that have full control of everything. And when you think about it, the fact that a large over 100 employee companies have a loss of about 100,000, whereas smaller companies under 100 employees that have less revenue and dollars flowing through have the median loss of 200,000. So double the larger companies.
Wow. And when we get down here, it looks like the risks are actually a bit different for the smaller employers versus the larger employers. Is that because of the larger employers' capacity to institute those controls?
Yeah, I think so. I would guess that, the easiest ways to steal money are also some of the ones that are probably easiest to prevent. But the reality is most small businesses have no controls whatsoever, even on those easy ways. So you see there the second one down, billing, and then from there, check and payment tampering, expense reimbursements, skimming, cash on hand. Those are all areas that are pretty easy to steal money if there are no controls.
Yep. Yep. I can see that. Well, so let's talk a little bit. We've got a little kind of a alarm, if you will, or the canary in the coal mine is this conversation of our small businesses. Most of our listeners who are business owners are seeing this and could be wondering like, okay, so we got this internal controls thing. What are some of the basic things that people can do to, like right now, after listening to this, maybe their heart's beating a little faster. For some of them listening, 200,000 might be half their profitability for the year. So what do they do today to start putting in maybe some of those internal controls?
Yeah, I think the biggest thing is to not put trust in one person. And I think time and time again, I see when I talk with small business owners, they really hate the financial side of the business. They hate the accounting. It's looked at because it's kind of a pain. There's a lot of work involved in it, a lot of processing work. It's not fun and exciting like sales or, working on the thing that they love. And I get that. But what happens time and time again is you get one trusted employee or trusted contractor, as it might be, and that person over time slowly gains the trust and therefore gets the keys to the castle. And I can't tell you how often we come in and look at a company, and the owners, managers have zero access to the accounting system.
Wow.
Zero access to the accounting system. All they might see is an occasional P&L or balance sheet. Well, that's not enough. That you would never be able to tell if someone's stealing money from you just by looking at an occasional P&L and balance sheet.
That, by the way, is so key. You could never find the fraud from a P&L and balance sheet. And yet that's where most business owners are reviewing monthly.
Yes, most business owners just review that as it stands, and maybe they ask questions to the bookkeeper. Maybe, right? This is even fewer people that might even ask a question of a bookkeeper or the accounting department, but they still don't have the access just to drill down one layer deep into the P&L, which, as we will probably get into a little bit later, can potentially solve some of this chance of fraud. So the biggest thing is don't have one trusted employee that's doing everything. You have to think about there's high risk areas, and it's things that are super common, like cutting checks. You can't have someone who can enter a bill into the system and create a vendor and cut the check without anybody knowing.
So are you, and I want to be totally clear, you're saying that for our listeners who've had that key employee who's been their bookkeeper for like 10 plus years, and that bookkeeper has those kind of controls, even though maybe there's been no fraud to date, have you seen those people, for lack of a better way of saying, just turn later in life?
I think it's probably most common that happens, because when you look at the numbers and you look at the studies that have come out, usually it's an employee who's been there a long time and something bad happens in their life. And the financial difficulty is usually really high up on that list, where someone has a financial difficulty and somehow they manage to tell themselves it's okay. And it usually starts small and then it builds. And, people for the most part, I believe, are good. Most people want to do good, and there's a lot of ethics experiments that have been out there that sort of prove that most people want to do the right thing. But when they're faced with difficulties and they have an opportunity, that's a recipe for potential fraud.
Well, and so that's a big one. So one, you're not immune just because the person that's on your accounting side doing, but rather they could just run into life circumstance that creates a bit of rationale in their head, and you may not find out about it for quite a while. In fact, small businesses, you mentioned, go longer without discovering it than big businesses do also.
That's right. Yeah. So the length of time and the total dollar of the loss is longer than the larger businesses.
So if we go away from some of the threats that exist and talk a little bit about what it's like for somebody scaling a business. So somebody's growing or has intentions to grow relatively rapidly. Does a similar issue happen where organizations outstrip maybe the capacity of their existing bookkeeper?
I think so. I think that does happen. Oftentimes, what I see is it's a startup, right? The business starts and they're kind of scrappy, right? And they're piecing things together. And at first, maybe piecing together an accounting solution works. It's a little bit inefficient, but it works. But what tends to happen with small businesses across the board, not just in the financial area, is these patched together processes. They keep growing, right? As the business scales, so do these patched together systems. And it doesn't happen very often where the business reimagines the whole thing. How should we be doing this? And in the accounting side, it oftentimes is the case that this patched together system isn't providing any value. It's not providing good numbers. It's costing a lot of money because it's very inefficient. And maybe it was a part-time person and it's 2 or 3 full-time people, and the business owner is thinking, well, why in the world is this taking so long, and why can't I get good numbers out of it? And it's because it's inefficient, and there hasn't been a real strategic mindset in developing how that accounting department runs.
Yeah, I totally get that. What are some examples of people attempting to grow and scale that accounting department to keep up with whatever good things they're doing in other parts of their business, where you've seen those inefficiencies develop, or just the lack of awareness of what's going on behind this great China wall of accounting that's so scary to many?
Yeah, there might be a couple different ways that, or things that I've seen. One is that the accounting is just too simple. So when you're small and you're doing it really inexpensively, I always say there's multiple ways to do accounting, quote unquote, correct, but you lose detail. So if you want the accounting to be correct and have the detail, and there's technical terms for all of that, but just think about it as being really accurate, timed properly, so that you can get information from those numbers. The analytics are good. It takes a lot of extra work, so it's kind of exponential. There's and I think that there's a break-even point of value where you could go all the way to, in the United States, GAAP, GAAP financials. That's what all the big Fortune 500 companies are required to do, is GAAP level financials. It's a rule book, essentially, of how you do accounting. And small businesses don't need to get to that level of accounting. I call it maybe GAAP light or accrual light accounting is a really good value point. It costs, more than these real basic books, but you're trying to just strike that balance of how do we get the best bang for the buck, so we get all the information we want. So a lot of times when the business is scaling, you start to need more. A business owner needs more dials, needs more controls as they're flying their plane. It gets a little more complex. They're not flying a Cessna anymore. They're flying, maybe a turboprop or a 2-engine plane or something like that, jet. And they need more controls because they no longer can just feel everything.
Yes.
They have to measure it, right? And in order to measure, you have to have good accounting and have these good numbers coming out. So that's the first one. Lack of ability to get really good numbers from the system they've created. And then the other one, I think, is more of a people problem, where maybe the person that they've hired or people that they've hired just don't have the right skill sets. I often, a lot of our clients are the ones that they don't really need a full-time person, or they don't really need 2 full-time people or 3 full-time people. They need kind of pieces of all these people, and they need a little bit of a bookkeeper, a little bit of accountant, a little bit of a controller, and a little bit of a CFO. And that mix changes as the company scales. So unless you're ready to hire and fire and spend a lot of time in your accounting department, it's really hard to do that on your own. to hire the right people, because you're constantly either underpaying them or you're overpaying them, depending on where you're at in the business cycle, what their skill sets are. So a lot of times I see, high profit margin businesses, and they've got some, maybe a controller or almost a CFO level person who's doing basic bookkeeping.
Mm-hmm.
Well, geez, you're paying a healthy 6-figure salary, benefits, and all these things for something that's should be much less expensive. But they're getting the high end work, and that's good. It's just a really expensive solution. Or what I see even more commonly is the flip of that. You have a real basic, they give it to the admin assistant to do QuickBooks, right? I hear that all the time. And the real basic QuickBooks an admin assistant can do, but you very quickly get outside of a skill set, or they don't have the skills of a true accountant or a controller or a CFO. So very quickly they get overwhelmed by any kind of complexity. They make mistakes in the books. They can't give good advice. They can't help the business owner interpret the numbers. And that is really the whole point.
So using an outsourced solution can create that internal scale. So maybe somebody's got a bookkeeper now and they feel like they're starting to outstrip them. That's the time for them to engage a firm like yours, is as they start broaching beyond the capacity of one person. It doesn't necessarily mean a relationship with an outside firm like yours that they got to let that person go.
Correct.
Right? They can integrate that additional knowledge in with that current trusted personnel.
Yeah, it depends on where they're at in the cycle. If they're scaling and they need people, a lot of times those folks are easily repurposed, or they have almost too much work as it stands. So they can all of a sudden be, a lot of you do need boots on the ground inside of the company. So you need someone who can do some of the accounting support work and help coach people and get things and figure out problems. So that person is usually a really good fit for that. And then there's always a backlog of projects. I always, hear that they're usually really good at doing that kind of that back office work that seems to never end. So a lot of times we see the person who used to be doing it just changes roles. Sometimes, there is that case where the business owner is just sort of tired of doing it. Maybe it's an employee that's just not performing well, and they decide to, not continue on with that relationship. But it's probably, I would say it's more common that the person is repurposed a little bit, shifted, and becomes, a much better value to the organization as well, because they can then focus on what they're most effective at.
Well, with that, what we're going to do is get a short message in from Sound Financial Group. And when we come back, Van, I want to talk to you a little bit about what it is people can do. We're recording this in the midst of COVID-19. So what can people do to take what is probably very close scrutiny of their current financials and make that a disciplined practice going forward after the recovery? We'll be right back. Paul Adams here at Sound Financial Group. Are you curious what you can accomplish with our help? You're here enjoying the show. Our philosophy is helping you increase your effectiveness with money, and now we have a way to help you take another step on your financial journey. We have designed a financial inquiry call for you and the thousands of other listeners of Your Business, Your Wealth. This is a complimentary 15-minute conversation where one of our team members will ask you some key questions, understand your concerns, and if appropriate, schedule a time for further conversation with an advisor. If you look at the episode description, you'll see a link to schedule a call at a time that's least invasive for you. And even if now's not the right time for us to work together, we'll point you toward resources to help you in your financial journey. We always look forward to connecting with our listeners, and we look forward to talking with you soon. Welcome back to Your Business, Your Wealth. We are here with Van Haas, founder of Accountix, and we're going to get into what I think is the most important part of this episode, which is how should you do the monthly financial review? Now, Van, in many years past, I was somebody who looked at the financial review of, okay, I paid the employees, paid the rent, and I've got some money left. Do I want to take it out or not? And the only thing that had me pay attention to my finances was there was 1 month many years ago, and I think most business owners have had this happen, where all of a sudden we'd had one of our best months ever. And then my bookkeeper said 6 weeks later, they said, well, you can't do that extra $50,000 investment. This was on my personal investment side. I said, well, what do you mean I can't do that? I said, we can't deploy that much out of the business right now. And it was the realization that all these things that I had invested in the business had drained our best and most profitable month ever. And it was only that time forward that I started saying, okay, this has got to be a regular practice with my money. So I think what's happening from what you said earlier is most business owners are looking at a P&L for the month, a P&L year to date, and a balance sheet, and that's it. What should they be doing for that monthly? I'm assuming it should be at least monthly, the finance meeting in the business?
Yeah, I think monthly at a minimum.
Okay. And what should they be doing in that? Who do you think should be in that meeting? What kind of topics should they cover?
Yeah, that's great. And I think that is, if business owners do nothing else from this talk, it would be to start having that meeting. I think that those monthly reviews, and it's not just all about accounting, right? It's going to be looking at performance. And you can read books and watch watch videos on this all day long, right? It's all about figuring out what your metrics should be, what metrics matter to you. So what dials, what dashboards do you need? And a dashboard can simply be a number. It doesn't have to be complicated. And I actually try to push people to go really simple. Let's look at a handful of numbers and make them simple numbers that you understand. But they need to be important to your business. So look at those every month. Profit, right, can be one of those, and that's something every business owner understands. At the bottom of the P&L is the profit number. So have these metrics that you want to look at every month. Look at those metrics, and then more importantly, you need to ask yourself some questions while you're looking at them. So one, you need a target. People call it a budget, a forecast, a projection, whatever the case may be. I think it's a really good practice for every business owner to go through that process at least once a year, to think about that year and think about what they want to accomplish and what does that look like in terms of numbers.
So and like budgeting both revenue and expenses by the month ahead of time.
Correct. Yeah. And the first time you do it, it doesn't have to be perfect, right? This is something that you're not submitting this to investors, probably. It's okay if you're wrong, but the simple act of just going through that exercise, same thing with the monthly review, the simple act of going through the exercise highlights many, many, many other things, right? As you're looking at each line and really critically thinking about that line, you start to think, well, what's in that? What's in that line item? What's in, and why are we saying that it's going to grow this much or shrink this much? Those questions that you ask yourself have huge implications for growth and for being successful. So project, budget, however you want to call it. You want to look ahead and by month, call out how much revenue do you think we're going to increase, by product line or by service line, however you can best and easiest split out your revenue. And then you want to look at your core costs. So those are, people call them direct costs or cost of goods sold. It's oftentimes missed in small businesses. A lot of times they don't even see that section on the P&L, but that's a middle section of the P&L. And out of that comes gross profit. And to me, that's probably one of the most important numbers that every business owner needs to have. Service businesses, product businesses, they're no difference because everybody has core direct costs. And think of it as, if you're a tire shop and you're selling tires, the cost of the tire goes in that middle area. If you're a service business and you have employees out in the field, their labor goes in that middle section. It's your core costs associated with making money. What do you have left over? And then everything else is basically, think of it as overhead. Those two metrics are very, very important to start to get to know. And if you have that projected out every month, you're going to see, well, how did we do? And if you're constantly missing on a metric, well, you probably forecasted wrong, and that's something you can tweak and adjust. And by doing this every single month, you're going to get better and better and better at it. And once you're pretty good at it, well, then you get even more information out of those meetings, or more value out of the meetings, because now you know when you missed, it's not simply just because we did it wrong. It's because, well, what's going on? And that's
something underneath that in the enterprise is causing that.
Yeah. So when you're looking at the did we miss it or make it, that question, both if you're doing really well or if you're doing really poorly, or hit or miss, is an important conversation. Well, if it's revenue and you went above, well, why? Let's repeat that. What did we do different? And same thing with costs. Well, direct costs were a little bit higher. Well, why? Well, I think we hired, remember we hired this, this one person that we thought was really skilled. We paid a little extra, we paid a premium. But we think it's going to, work itself out as we grow over the next couple of months. Okay, great. You have a reason and you're thinking it through, and you see the impact of, well, actually hiring that more expensive person, maybe that wasn't a good idea, or maybe it worked out really well over the next few months. But it really gets you thinking about what actions are we making and how do those contribute to the financial performance. Just like you said, you were surprised by the investments you made because you're making those investment decisions one at a time. And I see it all the time. Business owners reuse that same 10% growth 3 or 4 times.
As my mom puts it, everybody spends that tax refund 4 times before it lands in their mailbox.
Exactly.
So one thing I want to share with our audience is that we're talking about some big strategic things that can happen from having this consistent financial meeting. But by getting granular like this, I just want to share with you guys something that Corey and I have noticed. I will tell you, despite the fact that we've now been doing this monthly financial meeting for years and years and years, with the level of granularity that Van is talking about, where it's here's what we budgeted for the month, here's what actually happened. And with that, we will still find a $200 a month subscription that we've been paying for months that we stopped using. We've found, like, wait, how much are we buying for, whatever vendor, and finding cheaper solutions or finding discounts. And that may sound small use of the founder's time, but what it's doing is it's training the rest of the team. As I or Corey get more granular, it's training the rest of the team to be more granular every day of the week, watching out for the concerns that we have as owners. And so you're simultaneously training your leadership team on the accounting side to better watch for the things that you're really going to care about. So Van, as we wrap up today, what's the best way for somebody to get a hold of you and Accountix if they wanted to have further conversation on this exact topic?
Yeah, we're on all the social media out there, but email or go to the website, fill out a contact form, and we'll contact you. But my email address is probably the best. Van@accountix.co. So V like Victor, AN @accountix.co. And I'd be happy to spend a few minutes with anybody, even if it's just a question or if you want an infographic about fraud. I would add just one quick bonus to having these monthly reviews is just by having the monthly review by the business owner executive looking at their financials, they're reducing the potential fraud by about 50%.
Wow.
So by holding this meeting, diving into the details, having access to those financials, just that alone, you could decrease the number of cases and the total dollar impact if fraud occurs.
What a great gift to the audience in terms of being able to bring that to just some clear, concise value that they can walk away with. Van, I appreciate you taking the time. And for everybody watching, don't hesitate. You can check down below us. In the description of the video, you're going to find all of Van's contact information, how you can listen to more episodes of Your Business, Your Wealth. And as always, Van, thank you for being here. And for all of you, we hope that this has been a contribution to you being able to design and build a good life. Hey guys, so glad you could tune in and watch that video. I want to remind you to subscribe, be sure to hit the notification bell so you can get the latest piece of financial knowledge that we release. And don't forget, go to Amazon, get a copy of Sound Financial Advice. Why? Because it'll make you better looking and smarter.